Welcome to Truflation Space's special FOMC edition. It's day two in DC at the Eccles building. The tribe of 12 is gathered to make their decisions and give us, read the tea leaves and um, basically tell us what's going to happen here out at the Fed. We've got a special guest, a very special guest in investor, um, really guru legend, however you want to phrase him. It's Mark Yusko, should be with us for the full hour here to give us his insights and analysis. He's not only a TradFi guy and a macro guy, he's also a digital asset guy and bullish on the ways of Bitcoin. So it should be a good hour. Still waiting to get some of the crew in. We've got an all-star panel ahead of us as usual. We've got the great Shaftal rather, of dvdt.cc. We have our head of data out at Truflation.com, Ivan Jelic, and we're waiting for a couple more. Why don't I, just as I'm vamping here, let you guys know that we've got a new website, UI, UX, I guess. Get out at to Truflation.com and let us know what you think. We like it. It seems to be getting pretty good reviews, but we're kind of showing that we're more than just inflation. Obviously, the neologism Truflation connotates everything inflation, but it's more than that. It's RWA indexes, it's DPIN network, it's AI predictions. There's a governance portal there. I think you're going to see some of the data feeds that are just wild. I mean, the amount of information you get for free, basically, is unbelievable. And then, of course, if you choose Truflation premium product, you're up there with the big boys like the Bloomberg terminals and others for a fraction of that price. But that seems like a good segue to talk to Ivan Jelic. He's our head of data out at Truflation.com. Hey, Ivan, looks like you've got some new data feeds and some new pointy-headed metrics. How's the new website looking to you?
Hi, and great to be here again. Looking forward to see what the FOMC meeting will give us, even though we probably know that there will not be too big of a changes, but let me get into the data. New website looks great. I love it. So finally, everything that we've been working on internally is available online and everybody can see it, which is beautiful. And as you mentioned, we are adding new data feeds on a basically daily basis and currently doing some final touches on 100 plus new data feeds that should be live in next week or so. So a lot of
And
things happening and it's great to finally see it live.
and also in some personal news, you're going to be speaking out at Yale University, right?
Yeah, that's coming up in 2 weeks, so April 6th at Yale University. The Yale Blockchain Club is hosting the conference, which will be held within the university itself. So looking forward to that.
Very, very cool. That was our head of data out at Truflation.com, Ivan Jelic. We also have an all-star panel here. Our CEO of Truflation.com, Stefan Rust, is here. Head of product, Oliver Rust, and Omar Yahya of, Omar does everything. Lagrange, Blockframe, Vest Labs. They're all here to really kind of listen to and get some alpha from Mark Yusko of Morgan Creek. And basically, we're excited to have him on. Before we get to him directly, let's turn to the state of the Truflation Nation with our CEO, Stefan Rust. Hey, Stefan, I hear you're in London.
Yeah, I'm in London. Thank you. At the Digital Asset Summit. It's very interesting to see a lot more suits and institutions and financial institutions at such events, trying to learn about crypto and blockchain. Um, yeah, I mean, and on one hand, it's really good because what does it do? It brings a lot more liquidity into the market. And it is on the other hand, just a sign that Bitcoin has come in the last 14 years to something that now needs to be taken really seriously, and the financial markets seem to be doing so. So that's really nice to see. Um, all the big names are here, representatives of the big names. I still think they're a bit hesitant. They're not sure how to engage. They don't understand it quite well, but there are definitely pockets of people that really do understand it. Um, we had a great day yesterday where Tether, the actual stablecoin of choice across the crypto community, minted a new $1 billion in Tether, which means that there is still a lot of money entering into the crypto landscape, and that means that liquidity is growing inside crypto landscape as well, which is all good signs and all steps in showing that there is a stronger and stronger market. RWA is a big topic, so real world assets, whatever that means for a lot of different people. People have real different interpretations. And I found out that in the financial world, RWA means something very different. Risk weighted assets is what it means. And so there's always a bit of confusion in terms of what RWA is. And you can see that
Right.
the blockchain and the financial world are still slightly into separate sort of valleys. But yeah, it's just really good to see. And yeah, excited to have Mark here and with the brains that we have at this table to have a nice, interesting conversation around interest rates that are coming up, around inflation, what is really inflation, and how we can handle and offset inflation. I had a really good podcast with Raoul Pal the other day where we were talking about inflation actually being in the 15% range. So if you're not making 15%, in real terms, you're losing money, right? And so that's actually including a whole set of interesting elements that are not calculated in the cost of living, which is interest payments on your credit card, which Oliver has been doing and working to try and include into our inflation index. Interest rate on mortgages. Those are all elements that need to, student loan interest rates that should be embedded inside the calculation of a cost of living. And if you add all of those up and you add up the cost of increase in assets, you net it out at about a 15% range. And so, yeah, that's why we try to build Truflation and really capture the true cost of living, not only in being able to stay alive and live, but also to create wealth and allow next generations to also take advantage and benefit the way the boomers did in the previous generations.
Very nice. And if you're just joining us, you're listening to Truflation Spaces for the FOMC meeting in DC. They're all in the Eccles building, reading tea leaves, and they should either see their shadow or not a little bit later today. And then, of course, there's Powell's presser shortly after that. We've got a great panel. You just heard from our CEO, Stefan Roost. We, of course, have our head of data, Ivan Jelic, and Omar Yahya of LaGrange, Blockframe, and Vest Labs, and then Yosef Chantal of DVDT.cc. Last but not least is our head of product, that is Oliver Roost. He's basically our analyst par excellence. You'll read his inflation reports, which are, usually 16 pages, mandatory reading for investors. It's mathy, it's charty, it's just good stuff. Very, very popular. But he also does a lot of our Fed analysis, and really interesting to hear, Oliver, your take on what you think might happen. There's a general market consensus, but I'm kind of curious to hear what you have to say before we hand it over to our guest of honor here from Morgan Creek, Mark Yusko. So, Oliver, take it away, brother. Good to have you back.
Yeah, thanks a lot. Yeah, as you said, I think it's somewhat unexpected. It's not going to be that an interesting Fed meeting, at least for this meeting, because the expectation is that the Fed is going to hold its interest rate. I think the whole market is assuming that. We're assuming that. So I think the expectation is the Fed's going to hold for now. That to me is not the interesting question. The interesting question, much more now, is When does the Fed pull the trigger to start reducing interest rates? And are we, in fact, entering into a situation where the Fed is in between a rock and a hard place? And what I mean by that is, if you look at the state of the economy, the reason for reducing interest rates is to fuel GDP growth, right? And right now, the GDP growth that ended in 2023, the full year was 2.5%. Looking at a Q1 number around 2.1%. From latest forecasts, we'll get a bit closer towards the end of the month. We'll get a bit more accurate read on that. What's the real driver for the Fed to reduce interest rates, at least in the short term? Factor on top of that, retail sales going gangbusters. Consumers are still spending. And you have inflation going up. And we're expecting inflation to increase further, or definitely hold as stable, or if not a marginal increase in the next coming months. So, you look at that outlook, I think the Fed's in a tough spot at the moment. And I think to get unanimous consensus out of the Fed committee, the FOMC committee members who are going to be voting this year, is also going to be a tough spot as to when they start to increase. And I think, if you think about all of that, if the economy starts to drop, inflation holds steady or starts to increase, how much of a repeat of the late 70s, early 80s stagflationary market are we going to be entering into? So, a lot of things to ponder. I think that's the far more interesting discussion to be having. But I think, we're not expecting the Fed to reduce interest rates at least until the middle of this year at the absolute earliest. But, with new data comes new decision processes and new additional inputs into the analysis. So keep in touch and let us know. And that's it.
Very nice. Thanks, Oliver. You are listening to Truflation Spaces FOMC edition. We've got the great Mark Yusko from Morgan Creek. You can follow all that he does out at morgancreekcap.com. He's obviously a TradFi guy. He knows that area very well. And what is kind of more interesting for us and why we brought him on is that he, like Truflation, kind of bridges the gap between legacy finance and the new digital age. And he's very bullish on Bitcoin. He's got a lot to say. And what I think another reason why you want to bring someone like Mark on is that he's a sober voice. So he's not a rah polemicist. He gives you the straight, no chaser dope here. So without any further ado, Mark, we really appreciate you coming on, brother. How are you?
I'm doing great. I appreciate the euphemism for being an old guy, being a TradFi guy. And really excited to be here and love all the setup to the conversation.
Very nice. So, looking at today, again, as Oliver said, there's it seems to be very little mystery around what might happen today. But I'm curious as to your take on the Fed and its relationship to something like digital asset classes, in particular Bitcoin. Anyway, I'll kind of leave it like that.
Look, I mean, it's amazing that 90 days ago, 90 days, right? We're not talking like 3 years ago. 90 days ago, the market, as judged by the futures market, said there was a 90% chance of a rate cut today. 90 days ago, 90% chance. Today, it's a 1% chance. So it's not going to happen. And again, 90 days ago, it was 100% chance. Maybe it was 99. I don't know if they do 100% chance of a rate cut in June. And that's down to 50. So what I don't understand at all is, and I think Oliver laid it out, kind of nicely, why we're even talking about rate cuts. There's nothing going on economically that says we should be cutting interest rates and increasing the debacle that is currency devaluation. And this will go back to, I'll just set the stage early. The Fed is neither federal nor has any reserves. It shouldn't exist. It is a private organization that took over our country in 1913 after a 6-year birthing process and was born at Jekyll Island, which you can't make that shit up, right? The creature from Jekyll Island. So the job of the Fed is very simple. It's to steal the wealth from us, from the masses, and give it to a very small group of people at the top, most of them European families, and a handful of American industrialists and banksters. So let's just be very clear about their job. Then this whole notion that inflation is somehow a good thing is just total nonsense. It's total nonsense. From 1776, when the Republic was formed, to 1913, a dollar, right, was worth $1. There was no such thing as inflation. And yes, there was some valuation. I mean, there was some, not valuation, there was some variation in the value of the currency around the Civil War and the Great Depression. Like the Depression pre what people call the Great Depression in the 20s, that was a piker compared to the real depression in the 1840s. So there was some variation in the value of the dollar, but there was no nonsense of, oh, we're going to devalue the currency, which is what inflation really is. We're going to devalue the currency 2% a year, and that's good for you. How is taking half of my purchasing power over a 30-year period somehow good for me? On no planet is that good for me. So with that as backdrop, I come to this obsession with the Fed and central bankers around the world as insanity, right? I mean, my friend says it best. I remember a day when I didn't know the names of the central bankers. I long for those days to return. And now we put them on the cover of magazines and say they saved the world. Ben Bernanke did not save the world in any way, shape, or form. China saved the world. They printed $4 trillion at the trough of the global financial system, and they propped it back up. So central bankers didn't do that. Governments did. And anyway, I'll stop there and see if there are questions.
I'm just waiting for you to come out of your shell and kind of really tell us what you think.
Yeah, I'm a shy guy. I am a shy guy. I don't like to speak my mind. In fact, it's really
Wow.
funny. I have some theses on kind of what really happened with FTX and all that nonsense, and I was going down the rabbit hole on a podcast, and suddenly the lights went out, and then the electricity failed, and people were like, "Oh my God, did the black hats come and get you?" I'm like, "Well, no, not this time." But yeah, although no one really cares about me, but if they listen to what I said on occasion, they might be mad at me.
Yeah, it's something that we do examine from time to time, is kind of the role of the Fed and its legitimacy, and we always come back to it in one form or another after we're done evaluating it. But let me bring in Omar Yahia here. He's part of our panel, and he's with Lagrange, Blockframe, and Vest Labs, and so he's in the digital space as well. He's also part of the great podcast with Stefan called Stefan and Omar Uncut. But Omar, what are your thoughts on what Mark was saying in terms of the legitimacy of the Fed? And because I know I've heard you kind of wax philosophical about these topics as well. What do you think about what Mark just said?
Hi, Mark. It's a pleasure. Actually, this topic is something that, as you mentioned, Stefan and I have discussed in sort of great detail. And I think the note about Ben Bernanke I thought was quite funny, because not only did he save the world, he was worthy of a Nobel Prize. He was, funny enough, he was the leading expert on the quote unquote Great Depression of the late 20s, early 30s. And he made the public commitment of, this will never happen again in America, which I thought was a very sort of bold statement. And I'm sure Mark has a lot to say about that. What I really think the interesting part about the quote unquote mandate of the Federal Reserve is this idea that their objectives have constantly changed over time, right? You can see this in writing, and then you can see this, of course, in the meeting notes of the committee. What's interesting is that the premise, as Mark mentioned, was to maintain economic stability by providing an elastic money supply. That's sort of, macroeconomics 101. That's how it's defined in the textbook. But then all of a sudden, other mandates and other objectives started to creep in to the original mandate. One of which was maintaining regular employment. I mean, that seems like an interesting proposition, but what does that have to do with the pseudo central bank of a government? And then something about equal opportunities and things of that nature. And not, again, interesting proposition. Not sure what it has to do with the mandates or the original objective of a pseudo central bank. So, Mark, what do you think of all that?
Oh no! I mean, again, 100% in violent agreement, right? The word, or I guess it's not a word, but the acronym ETF. To me, it doesn't stand for electronically traded fund. It stands for end the Fed. Hat tip to Rudy Havenstein. And the Fed shouldn't exist. I mean, it does exist, and people have to understand why the Fed exists. And it goes all the way back to the 1600s in the Netherlands. The Dutch, with ties to the Rothschild clan, invented this idea of a central bank. And to your point, what exactly is a central bank? Well, before 1607, there was no such thing, and banking was basically done by local merchants and people of power, governors in different parts of the world, and it really started in the 1100s, 1200s, with this idea that a bunch of Portuguese monks that happened to be the Knights Templar put in place, and then the Venetians kind of stole that. The Medicis were good at that, and they ran the world for about 300 years. And then the Portuguese kind of wrested control back, and they had the world reserve currency for 100 years, and the Spanish took them over, and then the Netherlands suddenly, remember, the Netherlands is about the size of Ohio, and somehow they conquered the Spanish Armada. Well, how the hell did they do that? Well, they created this central bank that would print money out of thin air. Okay, for the first time, it wasn't backed by gold or silver or plunder or other things that these people were, like the knights would hold the gold for their Templar brothers, and when they didn't come back, they'd say, "Oh, well, now we got a bunch of gold. We can lend it out and charge interest and all that good stuff." But ultimately, this new central bank could print money and give it to mercenary soldiers and create a force that could defeat the Spanish Armada, and they became the most powerful. And then they got overly indebted, which is how all empires end. And the French took them over. Louis XV rose in power, and then he overspent. And we all heard the let them eat cake stuff, which is exactly what we're going through now in the United States, bread and circuses, which goes all the way back to Roman times. And then they fell and were conquered by the British. Well, then there was this thing called the Bank of England. Well, the Bank of England basically took the Dutch playbook, again, headed by a Rothschild member. And a stat that people don't really appreciate, this is where the lights are going to go out. The Rothschild family, it's a single family. It's a big family. That's a lot of heirs, lots of people. But that single family has as much wealth as the bottom 3/4 of the people on this planet. So one family, 6 billion people. It's pretty crazy. So how did that happen? Well, they figured out, and look, I give them credit for figuring it out. They figured out that a normal bank would lend to people. And lending to people is perfectly fine business, and it's marginally profitable. But sometimes people default on their loans, and bad things happen, and natural disasters, and And so then better banks lent to businesses and corporations. Well, the Rothschilds figured out that banks that lent to governments, that was the business to get into. So the Bank of England lent to the British government and controlled the British government for all intents and purposes because they got overly indebted. And there was a American who went over to work for this bank in England, run by that group, and he hired this young lad, J.P. Morgan, because he was buddies with his dad, Junius, and they cooked up the plan to create the Federal Reserve. And J.P. Morgan's best buddy was John D. Rockefeller. His dad was Amory Aldrich, so they, pulled it through Congress, and over a 6-year period after 1907 Knickerbocker crash, you had the birth of this central banking disaster that has been, again, wreaking havoc on us since its formation. And what bothers me most about it now, and I shouldn't, I shouldn't complain that much because, touch wood, those of us who have played the game, a little bit properly and took our, to quote Bachman Turner Overdrive, take our slaving job and get our pay. If you've worked hard and saved your money and put a little bit away, you've been okay. And yes, a first world problem, except for one tiny fact. You talked about the Depression and that Bernanke said we'd never have one. We have one. Now it's not for the 1%. They're doing great. The rich people are super rich and they're really happy. But the average person in America, I mean, I don't want to overly personalize it, but we have a friend that, long story short, they blew out their knee playing basketball, and through a little quirk, they didn't pay for their health insurance, and this surgery to replace, what the damage that was done to the knee is be about $40,000. Well, they don't have $40,000, and they don't have insurance, and so, set up a GoFundMe to try to help them, and that's how close the average person is to total financial ruin. The average person doesn't have $500 to, pay for an emergency, let alone $40,000. So, but why does a knee surgery cost $40,000? That's a whole nother story for another day. But that's a long, rambling series of thoughts on there is a systematic process that's been going on for hundreds of years to consolidate wealth in this small number of hands. And today we have the highest wealth and income inequality in the history of mankind. And yeah, you look at, the GDP growth of the United States, 2.1%, that's really good, right? Well, let's look closer at that. Is it? Right? What's it made up of? What are the Truflation measures actually looking at? Are retail sales actually going up if people are paying more for gas because the price of oil went up because the Saudis squeezed the price of oil? I don't know. Is that really economic growth? Is that really a good thing? So many things to talk about.
Yeah. And if you're just joining us, you're listening to Truflation.com's FOMC Spaces with special guest Mark Yusko of Morgan Creek, who you just heard deliver a clinic there on the history of the Fed and central banking. I guess that leads us into one of your obsessions now, which is Bitcoin and maybe digital assets more broadly, but Bitcoin in particular. I've seen you make different calls, and I'll let you kind of go through that. But what's your considering the backdrop of the Fed and the central bank, obviously in 2009, embedded into the Genesis code there, was the chancellors and the Bank of England and all that good stuff against the backdrop of a Fed-made crisis, or at least a U.S.-made banking and mortgage crisis. How much? Well, I'll just kind of slow down there.
Well, no, there's so many things to talk about.
Uh-huh.
We need more time, but look, it's not a mistake or an accident or unimportant that the first thing in the Bitcoin blockchain is an image of the headline, the chancellor on the brink of second bailout for the banks. Bitcoin wasn't coded on January 3rd, 2009, right? It wasn't coded in one day. It's not an accident that it was literally at the peak of the global financial crisis that this incredible technology was unfurled. And it's the culmination of about 31 years of work. It goes all the way back to 1988 with the Crypto Anarchist Manifesto from Tim May, who predicted everything that was going to happen over the next 30 years. But no one actually read it because Tim was an anarchist and a hermit and he didn't have any friends. And so for 20 years, no one really knew about it. And then ultimately it took, Satoshi Nakamoto, whoever he is, I say he, she, they, but he self-identifies as a he once. So to create this amazing thing called Bitcoin, which was actually predicted in 1988 after the Crypto Anarchist Manifesto was written. It was predicted on the cover of The Economist magazine that there would be a world currency. It'd be called the Phoenix. Now, why is it called the Phoenix? It's pretty scary shit. If you go back to the original coinage, it had the picture of an emperor on the front and an owl on the back in Roman times, in Greek times. And then when the Romans came, they changed that to an eagle. And since that day, all coinage around the world has a picture of some emperor, king, or whoever on the front, and this eagle on the back or bird on the back. And so, the Phoenix Rising, and you go back and people say, "Oh, that's the Nazi, it's the Nazi eagle or phoenix." Are you joking? It goes way, 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 way back before the Nazis. It goes back millennia. So this is not like a new thing, and ultimately you have this challenge of governments being in control of basically of humanity and all the things that we think about as money. But ultimately there's only been one money in the history of the world. Now, it's not 100% true, but money is an asset that exists in the absence of a liability. Right? Everything else that we think of as money is not money, it's currency. Currency is backed by debt. Currency is issued by governments and nation states. But money, an asset that exists in the absence of a liability, there have been attempts to make it other things over time, but at the end of the day, gold has been money. And gold sits at the base layer of all monetary systems globally, right? The central banks buy gold. They put it in vaults. Well, at least they tell us they do. We're not sure because we haven't audited Fort Knox in a while, but we know other central banks buy gold and then they issue debt and currency, whether it's, euros or yen or renminbi or whatever. And that's how the global monetary system works. But at the base of it, until 1971, was gold. And gold was this, unit of account and store of value. And currencies used to have to be backed by it. Well, in the United States in 1971, we changed that and we cut a deal with Saudi Arabia, said we would protect them at any cost so long as they priced all oil transactions in the world in dollars. And that was a great system. And the petrodollar system, and it created U.S. dollar hegemony around the world. So 8% of global trade is with the United States, but 60% of global trade is priced in dollars because of this deal. Well, what happened if you threatened that? So let's see. Iraq said once they were going to price oil in euros, not dollars, and Saddam got, eliminated. Gaddafi said he was going to price in gold, and he got eliminated. So anyone who threatened that, Saudi U.S. hegemony basically got eliminated. So we have this world since 1971, which also was the same year that the WEF was incorporated, which is kind of weird. So you got all of that controlling money supply and money and banking. We got these central banks that can print money out of thin air, and we have these other banking systems that are owned by very wealthy, prominent families, primarily European, but some U.S. And we have this global financial crisis, right? And fractional reserve banking. I'm not actually one of these maxis that hates fractional reserve banking. I actually think fractional reserve banking is what creates greatness in the world, right? Name a country you would live in that doesn't have a good fractional reserve banking system. I'll wait because there isn't one. So the problem is the abuse of the fractional reserve system by extensive leverage. So whether that's Deutsche Bank or whether that's Lehman or Bear Stearns, whatever it was. So you have this collapse. Well, there is a solution to that risk and that collapse, which is to substitute a deflationary currency for an inflationary currency. So that's what Bitcoin was created to do. So Bitcoin is unfurled or unleashed on the world in 2009, and nobody cares, right? Because it's a bunch of cypherpunks that don't talk to each other, and nobody really knows about it. And a couple high school kids or college kids, mine some on their computer, and then the computer crashes and they can't get their hard drive out, and all kinds of stuff. But at the end of the day, for the first few years, it was a science experiment that was rooted in this great idea that a fixed supply of currency that could not be altered, that could accrete value over time as people converted out of inflationary currencies into this deflationary asset. And over time, it grew and it had the tipping point. I would say that, to me, the tipping point was kind of, $10, whatever the number is, whether it's 10, 20, doesn't really matter. But the miracle was that it made it to that number. Going from $100 to $1,000 or $1,000 to $20,000, that's not the miracle. The miracle is that it survived from fractional, percentages of a penny up to this, magic number of $1 or $10, whatever the number is. And then suddenly people started to look at it and say, oh, okay, now I understand what it is. And so to me, everyone, and I do mean everyone, that's why my hashtag #GetOffZero exists, everyone has to own some. Now, what is some? Well, some is your running money, right? It's the amount of currency you want outside the system that is not subject to confiscation. And what I mean by confiscation is not that they literally take it, but that they steal it through, creating money supply, right? From 1776 to 2020, we had $10 trillion printed. $10 trillion was created over the first 244 years of the Republic. Then, in just 18 months, we printed another $10 trillion. Well, it turns out if you have $10 trillion and you print another $10 trillion, what happens to the value of your currency? Well, it goes down. In fact, it goes down by half. Well, wait a second. Zillow tells me my house here in North Carolina went up by 50% over that period. No, it didn't. My house did not grow. My house did not get more efficient. My house actually wore out. I had to put money into it to keep it even the same. So what happened is the money got worse. So all this conversation about inflation, it's not what we're dealing with right now. We're dealing with massive currency devaluation because of the cult of Kelton. Stephanie Kelton, maybe the dumbest person on the planet, which is not charitable, but it's what I think, convinced a whole bunch of people. Actually, maybe they're even dumber than she is, because she convinced these people that this was right, that you could print as much money as you want as long as you were the world reserve currency and nothing would matter. This is insane, absolutely insane. And now the average person is struggling right? Go to lunch somewhere and see how much it costs you, or try to buy a gallon of milk, or real food instead of processed poison. And all of this comes back to central banking, the Fed, and the evilness. And look, I used to call it the cabal, and I got in trouble because people said that's anti-Semitic, because I guess cabal is a trigger word for the people of the Jewish faith. So I apologize to anybody listening if I'm triggered you. So I don't say cabal anymore. So I say cartel, but then I offend all the people in Latin America. So I don't know what to call it, but some group. So some
Well,
group of people that control anything. Anyway, I'll stop.
one thing, Mark, that what you raised, which I thought was really interesting, was we figured out that it's actually smarter and more interesting to lend to the government, right? Because you know that you're likely to get your money back if you lend to the government, which has meant that the government has become asset allocators, right? So they sort of, because you're lending to them, all of a sudden the capital is sucked into their decision making process, and in terms of how do we allocate assets or money and do the investments to further improve the infrastructure, drive growth, create jobs, etc., which unfortunately in the last decades we haven't seen a very good return on investment towards that capital, yet we still continue to lend to this institution because we have this belief that they will always pay back, right? And
No.
they're
It's such a good point. But how, Stefan, do they pay it back? They pay it back by
yeah
printing more, and by
yeah
printing more, you devalue the
yeah
good which you have. And so the point here is, if creating wealth was as simple as printing money, wouldn't everybody do that? Right?
yeah
Wouldn't every country in the world just print more money? Like I have in my office at home. Actually, I have one here too. I can't show it to you because we don't have video, but I have a 100 trillion Zimbabwe
Zimbabwean
dollar bill,
dollar.
right?
I have the
That
same.
that would not buy a loaf of bread, right?
Yeah, yeah, yeah,
100 trillion. So
yeah.
Uncle Bob tried this, right? He tried to print lots and lots and lots of money to make Zimbabweans wealthier, but it doesn't work. And and this is why Bitcoin is so important, and gold too.
Exactly.
But
Yeah.
but it's not that Bitcoin gets better, right? Everybody says the price of Bitcoin went up. No, it didn't.
No,
One Bitcoin equals one Bitcoin,
one Bitcoin.
and will always equal
Yeah.
one Bitcoin. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars, yen, euros, bolivars. So here's the thing: there's almost never been a bear market in Venezuela for Bitcoin, right? Because the bolivar has just gone
Yeah, yeah.
down
It's
99.
just yeah,
Same thing
yeah,
with
yeah, yeah,
Turkish
yeah.
lira.
And
Same
so
thing
many
with
other countries. Yeah, exactly. Yeah.
Argentinian pesos. And so what people are missing is, be like, well, number go up, number go up. No, 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 no. It's currency that you value it in go down. And we are in a global race to the bottom,
Yeah.
right? Yen, euro, dollars, all of it, because the only way out, look, once, and you made the, and your point is so insightful and so important, right? There seems to be, you said there seems to be a decreasing return on investment. Exactly. If I am unlevered and I invest, I get a lot of bang for my buck in terms of GDP. If I'm levered a little bit, I can get a little more bang for my buck. And a little bit of leverage can enhance the return, because the return that I'm getting from the growth is outweighing the cost of that leverage. But there's a tipping point at which the leverage becomes less impactful. And
Oh
we've
yeah.
reached that tipping point
Yeah.
in the United States and in Japan and in Europe, where the incremental amount of debt is no longer producing a concomitant amount of GDP. And so once you reach a certain level of debt, you have four choices. You can pay it back, okay? Which, look, if you taxed the wealth of
Yeah.
all Americans, forget our income, which is stupid. We should tax consumption, not income. But even if you tax the wealth of all Americans, you couldn't pay back the debt. Okay, so paying it back is off the table.
Yeah.
Second thing you can do is you can restructure it. But to restructure debt, you have to have somebody take the other side. And no
Yep.
one's going to take 50 cents, 30 cents, 20 cents on the dollar. They're just not going to do it. So you can't restructure it. You can default on it, like Argentina or Venezuela, but then you get kicked out of power. And it turns out politicians like staying in power, so they don't like to default on debt. So your only choice is to inflate your way out, to devalue your currency, which is why we are in this systematic devaluation. And yesterday the Japanese raised interest rates for the first time in I don't know how long, a gazillion years. Technical term, gazillion. And now we're talking about, well, but the Fed's gonna lower rates. No, they're not. I mean, if
No
the
way.
goal is to devalue your currency faster than others, right? Well, I'm going to correct myself. If our goal was to devalue our currency faster than everybody else, then we would cut rates, because then it would make it less attractive versus the yen and others. But here's the problem. Every year in Davos, they have this big meeting and everybody goes and they pick who has to be in the hot box. And what do I mean by that? They pick who has to have the strong currency that year. Last year it was the euro, the year before that it was the yen, the year before that it was the dollar. And so every year someone has to not devalue, because let's take the euro, for example. The euro was created to be a devaluing currency, right? Because if you use the Deutschmark, it'd be too strong. So they brought in all the crappy, again, technical term, countries from all around Europe, said, hey, you can be in our club, and this will make our currency less valuable. Well, why does that matter? Because Germany is the most mercantilist country in the world. They make machine tools and cars, and they sell them to places like China. That's their job. They used to sell them to America, but then we bought enough. So we're in this over-levered world where we can't go back to unlevered unless we do what Japan is doing and we buy up all the debt, right? So now the the Bank of Japan owns 60+% of JGBs and about 50% of ETFs. So at some point when they own all the debt, they'll do a debt jubilee. And this goes all the way back to the original days, right? It used to be in ancient times, every 7 years you had a debt jubilee. So the way you lived your life, if you were really smart, is you got in as much debt as possible and you grew as fast as you could for the 7 years, and then your lender had to forgive the debt. And that was really good for the people at the top of the pyramid and really bad for the people at the bottom pyramid, which is why, think about the back of our currency. Why do we have that pyramid with the all-seeing eye? Right?
Yeah. Why do we? What I mean, this Jubilee concept is really interesting. It's like, but I mean, coming back to sort of the other point that you raised, right, around Bitcoin, right? So we've built this concept where we're trying to protect and sort of devalue, or debase the value of the currency on the one hand. On the other hand, we have this new currency emerging called Bitcoin, which started off, to your point, when you were talking, when it hit sort of the $10 value element, it started to become a very, a peer-to-peer electronic payment system. And then at some point, it became a store of value, right? We had to store it of value, because people feel they need to own one Bitcoin, right? You can't just have, one sat, or, 1,000, 10,000 Satoshis, right? So how do you see Bitcoin evolving as more and more adoptions happening? And we're seeing that right now. More and more people want to own Bitcoin. And very much like gold, more and more people in original days started buying gold and hoarding the gold and then creating currencies off the top of the gold. And in a way, the ETF is a new currency on top of the Bitcoins. Where do you see
No,
this
look,
going? And yeah,
100%. So look,
yeah,
if I had a bar of gold right now, right? So if I were Kyle Bass, right? Kyle actually keeps bars of gold in his office, but I don't. So if I had a bar of gold like Kyle, and even if I were strong enough to break it in half, which I'm not, I couldn't stuff it into my phone and send it to you, right? So gold is perfect as an asset. It's an asset that exists in the absence of a liability. It's been accepted by custom and belief for 5,000 years as the perfect money, except it has two significant flaws. it's not very portable, and it's not very divisible. I don't know if you've ever seen the movie Knight's Tale, right? You know, Heath Ledger wins the contest and he gets the little gold calf and he like bangs it on the table and says, go do what you do with this. So that's not a really good way to divide up the gold. So Bitcoin fixes both of that. I could send you any amount, like say, onto one Satoshi, 1/100 millionth of a Bitcoin over my phone, and all the Bitcoin in the world fits on my phone. Although I don't keep any on my phone, so don't SIM swap me, anybody who's listening. I've been SIM swapped twice. I don't keep it on my phone. I keep it other places. So the key is that Bitcoin will ultimately be digital gold, right? But now what I love is what Michael Saylor's been talking about. Gold is property, right? It's a form of property, and it's the property on which the rest of the financial system is built. And I use a simple example. So I don't use money, right? I use a little plastic card to do commerce. And then once a month, I settle up to the lower levels of the chain, right? So I have the Visa database, right? It's run on COBOL on a mainframe. And once a month, I settle down through ACH to Fedwire, which sits on top of gold at Fort Knox, theoretically. And so I never go down to the base layer of the chain. That's I don't go get the gold. I just work at, L4. And the same thing's going to happen in the digital world. And Eric Schmidt said this, and it's such a great quote. He said, what Satoshi gave us is a great gift. Bitcoin, it's great. But what he really gave us was the ability to create unique assets in the digital world through proof of work. And it's absolutely mind-bending when you think about what that means. And I just use a simple example of music. In the old days, right, I had a record album, I had a Foreigner album, and I lent it to my friend Lucky Rodriguez. And Lucky never gave it back, and I'm still pissed about it, actually. And so I had an analog physical disc, LP, and I gave it to him, and it disappeared. Well, later they had these thing called MP3s, and I could have made a copy of the MP3, cold as ice, and sent it to Lucky, and he could listen to it. And he didn't care if he had a copy or the original. Well, who cared whether he had a copy or original? Well, the music industry cared. So what did they do? Napster. So one CEO, one home office, one server, arrest the CEO, blow up the server, end of Napster. Well, now in the digital world, how does everybody get their music? Well, we pay for it through streaming because there are unique assets in the digital world enabled by blockchain technology. And so this technology applied to money and what Bitcoin is the perfect money. And it is a peer-to-peer network. Now, it's not the electronic cash like everybody thinks of where we're using it to buy coffee. You can, but that's not the point. What it should be is the base layer where everything of value ultimately settles to. And then we should have L2s and L3s on top that allow us to, exchange our cups of coffee and do all the stuff just like a Visa card does. But ultimately, it is the base layer of money in the same way gold has been for 5,000 years. And now in the digital age, through the advent of this amazing technology, we can do it. But the peer-to-peer still works. I can send you value peer-to-peer with no trusted third party. And this is why, look, for 838 years, and I'll leave you guys with this thought because I'm going to have to run. But, for 838 years, we've been living in the banking world, right? The Knights Templar created banking. The Medicis socialized it. They gave us dual entry accounting. And why is that important? Well, in the old days, I would lend, Omar some money, and I would write down on my papyrus tablet, because I'm super old, that he owes me $100. And he would come back a year later to pay me 110. I'd say, oh, Omar, I'm sorry, you owe me 220. He's like, no, I only borrowed 100. I'm like, look, it says right here in the ledger that you owe me 200. And he had to trust me. It turns out I'm not trustworthy. So he was screwed. So the Medicis came along and said, you know what? Omar, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will make sure the ledgers match. Well, it turns out they're corruptible. So I go to them during the year and say, I'm going to change my ledger to 200. I'll give you half. And they're like, done. So Omar comes back. He says, here's your 100. I'm like, no, 200. And he's like, hey, Medici's. They're like, oh, Omar, you must have written the number down wrong. We're sorry. So now we have a system of truth. We have a third ledger that says, Mark wrote down 100, Omar wrote down 100, and all of us on this call, thumbs up, 51%, agree that's what happened. So now we don't have to have trust. We don't have to have trust. We can have truth. And the truth net, right, which started this year, 2024, which is the evolution of the technology of computing. So blockchains are just a new evolution of computing. 54 mainframe, 68 microchip, 82 personal computer, 96 internet, 2010 mobile net, now truth net. Truth is better than trust. The trust industry takes $7 trillion a year of slippage. 7 trillion with a T. That's 6 to 8% of global GDP for establishing trust. We don't need that anymore because we have Bitcoin and truth. So who doesn't like that? All the frickin' banks don't like that. They like their $7 trillion. That's their revenues. So they're going to fight. So, from 2009 to 2015 was the first they ignore you phase. Right? They didn't give a shit about us nerds and geeks playing with our magic internet money. Go at it. From 16 to 21, it was then they laugh at you. Bunch of nerds and geeks playing with their magic internet money. Ha, ha, ha. 22 to 27, then they fight you. And they're going to fight really, really hard. They could go as far as saying, we're going to ban self-custody, just like they tried to ban gold, Executive Order 6102 in 1933. And here's a little factoid. It is not a coincidence that Satoshi Nakamoto's birthday is 4/5/73. 4/5 was the day in 1933 where gold was made illegal as a citizen to own it. 1973 was when that was reversed. That is not an accident, right? So all of this is interconnected, and all of it has to do with the future of a better form of currency so we can all get released from the ravages of inflation, tying it all back to the title of Truflation in the business. So, guys, thanks for having me.
Yeah.
It's been great fun, and we'll do it again sometime.
Yeah. Hey, Mark, before we let you skedaddle here, how do people follow your work and keep up with what you're doing?
So I'm easy to find. So I'm at Mark Yusko, MarkYusko on Twitter. I'll never call it X. It's always Twitter to me. And at Digital Currents is Morgan Creek Digital's site. We also have a podcast every week called the ABCDs of the Digital Age on Digital Currents. We also have guests on there every now and then. I'm all over the place. My wife says I like to talk a lot, which is probably not a good thing, but I am all over the internet, and MorganCreekCap.com is our website, and I'm pretty good at DM. I stink at everything else communication-wise. But I'm grateful for the opportunity to be with you all. I enjoyed it. I applaud what you guys are doing, and I said I look forward to doing this again sometime.
Thanks again. That was the great Mark Yusko of Morgan Creek. As he explained, you can follow him in the many ways there, but the main website is morgancreekcap.com. If you have questions for him, just add him in our threads, and maybe when he gets a chance, he'll address those. Thanks everybody for tuning in. We really appreciate it. That was a gigantic history lesson and clinic, man. I mean, I learned a ton. Great questions from the panel, of course, as usual. We are back in just a couple of weeks with our monthly CPI take. We may have a spaces coming up here on the first 100 days of the Milei Argentina experiment. So stay tuned for that and a whole bunch of other things going on. Thanks again to our panel. Joseph, you didn't get a chance to say anything. Do you want to break in real quick?
I think that it was amazing. I actually wanted to ask him about the 33 executive order. about the
Ah,
gold confiscation. And, that's what he said is brilliant. From 22 to 27, it's basically the fight time, right?
yep.
And we should be ready for it, that's for sure.
The fight
Yeah.
is on.
Another thing that I just wanted to do was to make as a comment, right? I really wanted to get his opinion now that the Wall Street is in Bitcoin and ETFs and the whole 9 yards. And what we're seeing is, while Bitcoin is pumping, we also have a whole bunch of dog coins, some with hats, some without hats, some with glasses, some with whatever. They're also pumping out there right now. So, we just wanted to ask his opinion about Satoshi and how he would look at things the way the crypto state is at right now. You know what I mean? I really wanted to ask him that question, but didn't get a chance to. But it was amazing. One of the best spaces, and definitely great to be here.
Yeah, we appreciate you as always coming on, and yeah, just sometimes you just got to sit back and let them cook, man. And that's that's what we did. We're all blown away by it. So thanks again, everybody. We really appreciate you tuning in. Head out to Truflation.com. We have a new website. It's really cool looking. I say it's sexy, but get out there. There's data feeds. We have a Big Mac index. We've got an EV index. I mean, it's most of it is all of it really is free, and you of course can always sign up for Truflation Premium if you want to join the big boys at a discount, a Bloomberg like terminal. So thanks everybody again, and we will see you soon. Bye for now.